this morning to inflation. The Federal Reserve is expected to raise interest rates again this week as prices we know show no sign of falling. Chief Economics Correspondent Rebecca Jarvis is at the New York Stock Exchange this morning with what this all means for your bottom line. Rebecca, good morning.
Good morning, Marion. It has very significant implications for everyone's money. The Fed begins its two-day meeting today. By tomorrow, it's expected to hike interest rates again. So what does that mean in real terms? Well, for your credit card, if you're carrying a $5,000 balance, your rate has already gone up dramatically this year, costing you about $870 more in interest. If the Fed does as expected, hiking interest rates tomorrow by 75 basis points, that amount balloons to $1,161. For your mortgage, for a new mortgage, it will also cost you more. If you take a look at a $300,000 mortgage, about a month ago, that would have cost you a monthly rate about $1,700. Now, with the Fed hiking interest rates and the average 30-year fixed rate mortgage above 6%, that same mortgage costs you about $1,850 a month. The same is true for other loans. Guys, where you do get paid a little more is on your savings account. Guys.
Now, where they're wrong, obviously, and we're going to break this down because I want you guys to truly understand exactly what's going on here. Where they're wrong is that you don't want to park your money inside of a savings account. And I've been telling you guys this for years, okay? And I've been telling you that, and I've been beating this into your head way before this started happening, way before the Fed started raising rates in order to be able to fight inflation, because inflation is runaway at this point. And this is one of the things that people are concerned about across the board. And people didn't start becoming concerned about it until they went to the grocery store, they went to the gas station, and they realized that it cost them more for eggs, chicken, bread, gas, all of the things that you do on a daily basis. And that's not even including what's happening with rental prices, mortgage rates. All of these costs are going to be passed down to the consumer. Now, instead of us solving for the problem, right, what we're doing, because you largely are just going to be the fallout guy. You're going to be the person that pay for it. But instead of us solving for the problem, what's happening is that is being passed on to the consumer. So you as a consumer need to do one of two things. And we're going to deep dive into that right now. But let's talk about this, right? So it's saying for Emily and Michael Brown, the Federal Reserve's rate hikes hit close to home. Browns had been renting a 2-bedroom apartment in Washington, D.C. when their now six-month-old daughter was born. Eager to upgrade to a bigger place, the couple wanted to put their savings to use by buying a home. Now, what have I told you for the longest? Inflation is like, it's like putting your money out here on the balcony, right? And then letting a couple dollars or 10% of it every year just go away. The price of a movie ticket today is different than the price of a movie ticket yesteryear. The price of a car is different than the price of a car yesteryear. And the same goes for every single thing in your life. Your money is not going to be worth the same because the cost of doing businesses and buying goods and services are continuously increasing. So it's like a hidden tax. It's the thing that is killing you, but you don't know it's killing you until it's already too late. You parking your money in a savings account is not the move, my friend. Not the move. But let's continue. But as they look for a place to live this year and watched mortgage rates and their potential monthly payments steadily climb, the couple lowered their budget from $500,000 to $400,000, which they should have did that in the first place. Listen, you should never be trying to finance as long as possible because it's going to cost you more in interest. If you finance for 30 instead of a 15, it is going to cost you more than double in interest. So the question then becomes, are we spending too much for the things that we want to buy on a regular basis, which is allowing for them to raise rates, which then in turn force you to focus more on the monthly payment instead of how much you're giving away in interest? Let's continue. And decided to put an offer on a home further away from the city with less space and fewer amenities. They said as rates continue to go up, we had to really bring down our budget and also be a little bit more realistic about what we're going to get for that budget. Emily Brown, a high school math teacher, told ABC News. Mortgage rates have more than doubled since January. Lenders and real estate companies say spurred by aggressive interest rate increases, as the Fed attempts to curb inflation. Now, we all know that the Fed is going to continue to work to increase interest rates, and it's really the only tool that they have. And so how this is working is they're raising the rates, which lowers demand, right? And then it also curbs inflation, which means that the cost of doing business is supposed to go down. But the problem is that it takes longer than we expected. So any decision that we make today is probably going to really start to reflect how it is that we're moving a couple years from now. In the meantime, inflation has remained at 8.3%, 9.1%, 8.6%, which is egregious because it's at 40-year highs. How many home buyers have dropped out of the housing market entirely because they can't afford any home that fits their needs? As the Fed keeps hiking interest rates to try to tame historic inflation, mortgage rates have spiked to levels not seen since the 2008 financial crisis. And with the central bank expected to increase rates again on Wednesday, which obviously we know that the stock market is going to react to it, as inflation remains stubbornly high, some aspiring homeowners find themselves stuck on the sidelines altogether. They say the price of the homes has jumped so much in the past year, then you take into account the high interest rates, is a really tough position to be in as a first-time home buyer. Mortgage rates hit 14-year highs. And then obviously we know everything as far as, compared to the 2008 30-year fixed rate mortgage, how much the interest rate is and how much more you're going to be paying and so on and so forth. The solution, ladies and gentlemen, the solution is that you need to start making more investments in things that's actually going to generate you more revenue that beats the rate of inflation. Every single thing that you do. Let me blow this up a little bit so you know exactly who is talking to you. Every single thing that you do is going to be affected financially. And when I say I look at everything from a business perspective, I'm telling you this because everything that's affecting you is going to be affecting you financially. Marriage. Who you lay next to is the biggest financial decision that you're ever going to make in your entire life. The home that you buy, how long you finance it is going to determine how much you give away in interest, right? You holding on to consumer debt like credit card debt and loans for stuff that you didn't even need, for stuff you don't care about anymore. It's absolutely killing your bottom line. Whether or not you are maxing out in your 401k and your Roth IRA and all of this other type of stuff is going to determine your net worth, which $1 million isn't even a lot of money anymore because the rate of inflation is killing the dollar, which largely is affecting how we value money in the first place, right? Every single thing you do, whether or not you finance a car, if you focus more on credit so you continue to buy stuff, everything you do is going to affect how much money you have to do the things that you really want to do. So what I advise people to do is to stay down longer, invest in themselves, stop buying stuff, focus more on experiences instead of stuff earlier in life, and then make your investment so that you can actually have multiple streams of income, because two things can be true at the same time. You can run that check up, which means that you investing in yourself allows for you to be more valuable because you make more money. But then on top of that, we also have layoffs. FedEx is laid off. Netflix is laid off. We have hiring being slowed at the big tech companies. We see Peloton going in the trash. And again, people are not making informed decisions. And so as a result, you're going to see more pain, more suffering before it gets better. But the only people that are going to be suffering the most, it's not even the poor people. It's going to be the middle class, because you are the ones that are the backbone of the United States of America and this economy. And you are the ones that the taxes are going to be passed on to. There's always ways for people like me to keep more money in our pocket and make sure that we get rid of the money so that we're not actually ones that's paying for the taxes as much as you are, even though the top 5% are the ones that pay the majority of the taxes. I'm going to lower my tax burden by being strategic, and it's the middle class that is going to suffer the most. Listen, if you need to kick it with me personally, email me at antondaniels413@gmail.com. And more importantly, make sure you tap into the Patreon. It has never been a better time to tap into the Patreon. Linking up with a group of people that's going in the direction that you're going in, making sure that you're successful. We do Patreon exclusive meetups, and we might even be doing New Year's in Miami just for the bag chasers. I love you guys. I appreciate you, but I need you to do me one more thing before we get up out of here. All right? Make sure you share this with your family and friends. We don't want to be successful by ourselves. Listen. The federal government is not working on your behalf. The man is not working on your behalf. Align yourself with a group of people that's going in the direction that you're going in. We over here. I love you. I'm appreciating you. I'm going to holler at you later. Peace.